Alrighty, sorry about that, everyone. Well, first of all, welcome. Today is Monday, April 13th, 2 days away from tax day. And there's a lot of news. So let's get into it right away. First and foremost, let me share my screen here. Give me one more sec. All right, so you guys can see this right here. So first and foremost, again, starting the day off, the first thing we're going to do is go to look at our news. All right, so what do we have here? We got China, Canada, dollar, US dollar. So here's the first thing we're paying attention to. So what does this tell us right here? Okay, so that's to do existing US home sales. It's a yellow folder. I say we can treat it sometimes as a yellow folder, sometimes as an orange folder, depending. We're in the ballpark, so it didn't have a massive impact on the market 20 minutes ago. But basically, if we take a look at the previous numbers, the previous number was 4.13 million. The forecast was 4.07. We came in under 4 at 3.98. So as we like to show you why this matters is, and it's the annualized number of residential buildings that were sold during the previous month, excluding new construction. When the number is greater than the forecast, which this is not, first of all, this won't be red, this will be green. That also indicates that's good for currency, that's good for the dollar. Um, it's down, so that can have a negative impact. Again, it didn't have a massive impact because that number is not significant. So that's the primary news we have right here that we care most about today. Right here for US2, we have member Moran speaking today, but again, this is it's not critical to what we're talking about right now, unless something something completely unexpected and off the cuff is said, which is highly unexpected. But what is important is that at 10 a.m., the U.S. started their blockade of the Strait of Hormuz. So this can directly impact oil prices and the entire market. So what happens is, again, that can affect the dollar, can affect the euro, can affect everything. So especially gold. So what we got here is basically Vance, our vice president, was over negotiating peace talks, and this basically happened. So things to notice too: there's a lot of large oil tankers now coming to, not coincidentally, the Gulf of America. So what did we do? We renamed it the Gulf of America. We went down to Venezuela and did what we did there with Maduro, and took over basically a region there with their existing government. But we're a very strong influence, significantly enhanced our access to oil, to crude oil. And then also that includes a lot more ships that are coming into that area in order to get oil because they cannot get it from the Strait of Hormuz. All right. So what the US has basically said, and let's go through this right now, is, again, this is up to the minute news here. So we have Wall Street indexes fall after the failed US Iran P talks unsettle investors. US stocks slide after Trump vows to block Hormuz. Again, Trump's blockade is starting. Why stocks are off modestly slow for now. Trump's blockade takes effect. US stocks are down modestly. So let's go over here and let's just take a look at a few different things and how that impacts oil. So oil was down here. Okay, so this is on Friday, 2 p.m. Lowest on Friday was, let's go to the daily actually. So on Friday, we were down, the low we had here was around 95. High we've had today is up around 105. Okay, we're at 101 right now, is where we're sitting. See 101.51. Again, this is up $10 compared to where we were. This is directly correlating to what's going on over there in the Gulf. If we jump over to gold, split second. You see, gold is consolidating a lot right now. So right now it's in this range right here. I was taking a look right now on the. Let me get off the daily. Go to the 4 hour. So I'm looking at the 4 hour and the 1 hour here. So one of the things we're looking at is possibly a pullback all the way down to here, or possibly even to 66, but a pullback to here and then see what price does and see if it goes back up. If it continues down, it may continue, but I'm trying to see right now, is it going to pull back to here so then go back up, or is it going to pull down all the way to the 66 before it turns around? We also have structure here. So, I mean, we could see a turnaround here like this candle did before, but what do we have here? We have two dojis. Okay, so we're just paying attention. Again, very volatile right now. This is something I am not jumping into and and actively pursuing. It's just something I'm observing, and I will be taking action on depending on how things work. Right above here, we can see in terms of structure, we have a demand zone right here. I mean, a supply zone right here. So as you can see, price came up, and what's at the bottom of that supply zone? We have the 10 moving average, which is white here, and the 20 moving average, which is blue. So price came up through the demand zone, hit the supply zone, bottom, hit the front wall of the supply zone, hit the 20, and then turned around and came back. All right, and that also happened to be right around in this 9-10 a.m. time frame. This is the time frame when the blockade started with the Strait of Hormuz. So there was some uncertainty as to whether it would actually happen. We expected it would, and it did. So if we drop down to the hour, just so you can kind of see what kind of impact that has. So again, right here, things are moving up at the 9 a.m. to 10 a.m. time frame. That was announced at 10 a.m. and we are coming all the way down, probably to the 66 here. Okay, so if the 66 is at 4,700, okay, so if we compare that to where we were over here, the 4,700 is right around here, which is almost at the base here. All right, so if it comes all the way down on the 1 hour to the 66, I like that structure better when I'm looking at right now. So in this chart, it's easier to see. Come all the way down here to the 66, and let's see what it's going to do. Is it going to push through and go down to the demand zone, or is it going to turn around and bounce? It's a high probability. I think it's going to sit right here, turn around and bounce. But again, we don't forget that this information up here and this information up here takes precedent over any of the technical information that we have. We also have right here, we have 32 minutes left. If this candle closes and is an engulfing candle, okay, so if this candle closes below this candle, that's typically a strong indicator the price is going to continue to move down. So we're going to be strongly observing this. I'm going to drop down to the 30 because that candle should have just changed. And we have a Einstein sell recommendation back here. Okay, so that came in when it came up to the 20 and the 66. We have the 66 crossing down below the 200. What else we got here? All right, so we came in through a demand zone. We are actually 1 minute, 40 seconds left in this candle. So let's see what it does. We had an old support line that can actually go. I want to get rid of that. That's inside here. Actually, I'm just going to get rid of that. I'm going to remark up this right now with you guys so we can kind of see what's going on. All right, using this live info we have right here. All right, so first thing right here, that's a live candle, so we're not going to touch that. Right here, that's not enough. This is a supply zone right here. So we're going to mark off this supply zone. And this is the 30-minute supply zone. So I'll do 30-minute supply zone. Okay. That I don't think is big enough to be a demand zone. This is a base, so I'm just going to mark that. So I'm going to mark this as a support line and base. Again, we have structure right here, and we also have the two moving averages. Tighten that up a little bit. We have a demand zone right here. Again, small, but we have one. 30-minute demand zone. Okay. I don't like that writing's too small, so I want to increase that to 12. All right, and okay, so the candle closed. What did it do? It did not close below the demand zone. It closed right at the top of it. So again, observing this, is it going to bounce off, or is it going to continue down? Again, we are expecting it could potentially push all the way down to here. I think we're on that 4,700 mark, which happens to be about the 50% on this supply zone. on this 30-minute supply zone. So right where this TP3 is, that would be the base, and that's why that number's there, because that's right where the 200 is on the 1 hour. So that is exactly where we would expect it to be. Let's go over here. So we got, let's see, let's go over there. The 20 and the 10 are right here. We've already pushed through them. So the only other structure yet we have is down below. Okay. So let's observe this. Let's also see how this euro and gold often have patterns. Like right here, you can see this. Okay. So euro is pushing up strong right now. And that's because the euro is pushing up against the dollar. Dollar's going down, euro's going up. So this is also relational. I like that. I actually want to, whatever. I'm not going to trade right now live on that. I'll get it after. But bottom line is we're on the, I like to trade this on the 4 hour. So on the 4 hour, here's the structure that we have. This is pushing up. We have, it's already over the 10. It's above the 20. It pushed through this supply zone. And now this supply zone is now, sorry, this demand zone was a supply zone. And it became a demand zone. And then it became a supply zone. So this is gone. This is more than 3 flips. So that's done. We'll see if this one becomes a demand zone. This is a line that we're going to observe. So this is a support line and base right here. And I create these templates because it makes it a lot easier for me just to go in and quickly change it and modify it and have it marked up. And let's see. So we have that demand zone right there, as I was saying, that became as a demand zone. It became a supply zone, pushed back up, became a demand zone, became a supply zone again. So that's why we got rid of this, because it was crossed 3 times. Now you can see this gap right here. We were saying this morning that this gap has to be filled. So I actually want to get in on that because it does have to fill that gap. So on this account, this is a small account that I have. I'm going to get in on the buy. I'm going to see it right now because I expect it to come up to at least here. So it's going to be a small move at 17200. So I'm going to go in here. I'm going to set my take profit to 1.172. Okay, I'm going to take up my stop loss, and I entered in 17132. This is not a big trade for me, so I don't want to lose a lot. This is just a quick entry. So that said 1713. So I'm just going to do 1.1703. Okay, just 10 pips, small. But that's coming right down to the 10. I'm comfortable with that. And honestly, I'm just going to forget that. I'll go back to it and watch it later. I'm not going to be living in and watching the price go up and down, but I do expect this will push up to at least here, and then we'll pay attention to what it does, and we'll take some action. Some of the notes that I had from this morning from our call is that anytime, for example, on gold, if we're going to trade the 4 hour, so what we have to do is take a look at the fib. So, and you'll see that a lot of the lines, support lines, end up matching. So I'm going to go to here. I'm going to go from the low to the high. And I'm going to drag it over here so that it's not. And then I'm going to change it so we're not on the 50. We're actually on the chart that Donnie's taking a look at. So let's see if we can zone in here. So the 50 was right here. Okay, so we wanted to see, is this one right here, is this candle, if it closes above the 50, that's an indication it's going to continue up. If it closes below, it's probably going to stay below. So we're just going to watch what it does right there. And that's one of the main important indicators. But as you can see too, this is right along a baseline right here. Okay. What else we can see here too is that, again, there's some consolidation over the last, say, 8 to 12 hours. We're currently 2 hours into this, so let's call it the last almost 10 hours. All right, after we had some good movement up, we had a big drop. And as you can see right here, you can't see this, and this is a gap because the market was closed. So the market fell. I mean, it came all the way down to here, and then it started pushing back up. But bottom line is, when the market opened, due to the news with Iran and the peace talks and the ceasefire, that had a major impact initially. And that's part of it. So that's kind of what's going on here. Let's see. I go over to the 1 hour, yeah, as you can see, we're in consolidation. Okay, you had an exhausted candle here. This is at Friday, 4 p.m. yesterday when the market opened. Okay, so over the weekend, because, and here's how this gap happens for people that don't know, is Friday, the market closes 5 p.m., 6 p.m., 5 p.m. But bottom line is this is that 4 to 5 p.m. candle. That's why it says 4. It closes at 5. And then what happens is over the weekend, the world doesn't stop. So news happens. So as news happens, when the market reopens on Sunday night, basically we had a large fall. So we had a large bearish movement, which came all the way down to here. This candle was exhausted on the RSI. And that means that like it's getting to the point where buyers are going to jump in. Okay. We're also right through the back wall of the demand zone. Okay. Which, so this would have been a good indication too. We already went through the 200 and we're down to this demand zone. And what did it do? It pushed off the front wall, went through this demand zone. The wick came down and touched the demand zone here. We have a tweezer bottom, then it pushed back up. Okay. So that's a good sign too in terms of a candle pattern. We have that tweezer bottom right here. That's often a reversal pattern. So you see that comes down here, the wick comes back down and it pulls back up. That's often a strong indicator as soon as this candle closes that the next candle is going to shoot up, which it did. Now we're in consolidation. Okay, so we got some minor movements. If we want to see how much we're moving, it's not a lot. Yeah, like 23 pips, 20 pips ballpark. Okay, so we're doing like 20 pip movements. The ATR on the 1 hour shows you that for every 1 hour, price is moving just under $22 an hour. I mean, $22 per hour at $21.92. If we compare that to the 4 hour, price is moving an estimated $46, almost $47, $46.99 every 4 hours is the general price movement that we're seeing. So this candle right here is important. We do want to see where it goes and where it closes. I'm going to jump over again to Euro USD just to check in on that on the 4 hour. All right, so here we are. It's pushing up. It did pull back a little bit, as we can tell by that wick. So for example, I'll just show you what's going on in this trade. It's a small trade. I'm up 6 cents. Again, it's 0.01. Okay, so we're dealing with very small money, but we're still up and we are profitable. Okay, and that is the goal. I'm not going to babysit it as it goes up and down. Again, expecting it to come up to hit at least here. That will fill the gap that was created between here and here. And that's the thing we were looking for, is when it was going to fill the gap. The right time to get in would have been right here or right here. It would have been the best time to get in. Would have bounced up this support line. Again, didn't do that at the time, but I also got in the market late today because I had other things going on. But this is the thing you do, and you don't jump in until you have your structure, until you've marked up your charts. It's part of my day. The first thing I do, I think I've mentioned this before, but I have a morning routine, and one of the last things I do as part of my morning routine is I go in and I check the market news. And after I check the market news, and that's exactly what I showed you here, I start off at Forex Factory and just see what's going on for the day. So again, I'll give it a quick check as to what's coming up tomorrow. So tomorrow we have some important news coming up at 8:30 a.m. So this is before the market opens. So we have the weekly employment change, we have the core PPI for month over month, and we have the PPI for month over month. As a quick reminder, the core PPI, this is the change in price of finished goods and services sold by producers, excluding food and energy. Again, we're looking for a number greater than forecast. Looking at where it was in the forecast, we're expecting it to be right on par with where it currently is. We also have, if I go down one below to this, which is again the change in price in finished goods and services sold by producers. Same thing. We're looking for something that's greater. Okay, actual greater than forecast is good for currency, so that's what impacts the dollar. So right now, the previous was 0.7%. The forecast is 1.2%. We'll see where it comes in tomorrow. This shows a quick history of what happened over the previous months, just so we can see in the previous weeks. So it gives us some sort of information that we can take a look at. It's been good for the economy. It's been good for the currency, over the last 3, and it's stayed steady for pretty much the 2 before that. So this is just general information that we're making sure we're aware of as we go into the market tomorrow. Yes, so besides that, we have some other people speaking tomorrow, but again, yellow folders, nothing that's we expect to really move a lot. Right here, Okay, so the blockade of the Strait of Hormuz appears to take effect. This is something that we're just constantly going to be checking and seeing throughout the day. It's important information. I'm not going to be, yep, see, here we go. We're pushing back up. So if I go back here, it's probably what, 10 cents, 25 pence. Okay, so this is, again, very minor lot size, 0.01. It's the smallest you can do. All right, but we are expecting this to fill that gap. So once this hits here, so what I did here, actually see if I can do it and show you. So if I click on this, right, this is where it's going to fill that gap. So I'm actually going to move it up slightly higher. So it's that actual candle right there. And I'm going to modify it. So once it comes up and hits this line, this trade's going to automatically close because I hit my target. All right. And I'm not, yes, I'd love to get some huge win, but my goal here is to recognize what happened. And what I recognized is there's a gap right here. And that's between Friday and Sunday. So I'm just waiting for that space to be filled and that gap to be filled, which will happen. Once that's done, then I've succeeded on that trade. That trade will close and I'll look for my next opportunity. Okay. Let's go over here. On Euro USD too, the information that we got, especially as you can see, Euro USD is pushing up because gold is also pushing up. And I said the focus right here is that it has to fill that gap, which we see it doing right now. And that price to close above the 10 moving average. Okay, so it ends up closing above this 10 moving average. We're going to expect it to continue pushing up. And this is what I'm focused on, as I said before, the 4 hour. Okay, so I like trading the 4 hour on gold, on Euro USD. And again, if this price, we still got some time. We got an hour and 17 minutes, so there's plenty of time. I'll be watching it, but we're going to look for it to continue to push it up as long as it closes above gold. It closes above that 10 moving average. The 10 moving average is on my chart. It's the white line. Okay. Also, we want to quickly look down here at the same chart at the RSI. So what do we see? We have a V correction here. We're way above the 50, so the 50 is not an issue, but we are approaching Jerome. Jerome is that 10 moving average. All right. So we want to see, will price push through Jerome or will it bounce off it? It is very frequent where Jerome is a resistance line. Well, this will come up and bounce right off. And Jerome again is just a nickname given by Donnie to the 10 moving average because he likened it to a bouncer who doesn't let people enter a building. He pushes people away and prevents entry to certain, like to a club or to a bar or something, for example. So that's just the name he provided. And that's also going to correlate right with this front wall. All right. So it's going to be interesting to see what it does. I fully expect it's going to come up here and touch. The question is, will it continue up or will it come back down? If we go to the 1 hour, if we want to get more current information, so we don't have 4 hours to the chart, till it closes, we have 16 minutes to this candle closes. All right, and what you see right here is I got to clean up this chart because I have some old information. So right here we have a demand zone. Let's just take a look at it, how I would look at it every day. Demand zone flipped and became a supply zone. Sorry, demand zone right here flipped and became a supply zone with this candle right here over the weekend. And then it pushed back up and became a demand zone. So this is actually a demand zone flip too. And that's the way I like to do it. And everyone doesn't do it like that. That's not Donnie's way. That's just my way. So I can know. Because if it flips one more time, so if one more candle closes below it, then this zone is gone. But basically what happened is we had a demand zone here, went up all the way. Price came down over the weekend and fell. And that's what I was saying. This gap needs to be filled. But when price fell, that caused this to switch into a supply zone because now price is below. So this is now the ceiling. All right. So this became a supply zone that was flipped. When price pushed back through and closed above it, it became a demand zone again. As you can kind of see, price has been using it a lot to bounce off of and hasn't really gone below it. Right here, it went to the 50 on this demand zone, but that's all it's doing. It went to the 50 and then it shot back up. All right. So again, this is pushing up. We full intent that this is, again, going to go right to here, which is the same number we were looking at on the other chart. But we see continuous movement. If we go down to even, let's say, the 5 minute, you can see continuous movement up. Again, this is indicating that candle is exhausted. So on the RSI, if we look at it, we're only on the 5 minute chart here, but you can see it's at 78%, okay, which means exhausted. Anything over, I believe it's 75 is going to trigger, or 70 is going to trigger. That exhaustion is approaching. Once it hits 80 or above 80, we're strongly expecting price to turn around quickly. Okay, it can go higher, but we typically, once it gets above that 80 mark or right to that 80 mark, that's a strong wall where it'll start to turn around. So that's on the 5-minute. If we go to the 15-minute RSI, you can see it's similar. Okay, so price is way above Jerome. That's not an issue. If we look at the actual chart, again, it is exhausted. And the reason why those candles are showing exhausted, and that's what the white candle is because we're above 70. We're at 73. On the 30, again, same thing. It's pointing straight up. It's continuing up. 45 is starting to turn around. Let's see. 1 hour is facing straight up. 4 hours facing straight up, like we already talked about. It's about to hit Jerome. Daily. Daily has not caught up yet. Daily is slightly heading down, so it's just something that we want to watch. All right. So I'm going to go back to the 30 for 1 minute. I'm going to close this. And as you can see, there's been a very strong bullish movement up. All right, and that's basically right up to, it's going to come right up to about here, which is going to fill that gap. And that's the same thing right here, where it's going to come up to, the gap was right here, so it's probably going to come up right to here. On the 4 hour, that's just right above where we are. We're almost at our mark. Okay, we're super close to hitting our mark. Yeah, we haven't hit it yet, but we're very close. Okay, and again, this is a minor. This is a 50 cents win. All right, again, this is a very small account that was down to $25. We had a low account. We brought it back up to $42.50. Currently, right now, it's over 43. I could close it out right now because it's pretty much the same, but I wanted to show that I trust that it's going to hit the number that I set, and I'm going to let it do its thing. It just probably just hit, almost. So you can see it's very close. Once it gets up to this line right here at the bottom, we're at our mark. You can see that green line. So the green line is, that's our take profit. That's where we're looking for it to hit. Once it hits there, this will close, and this deal, and this trade will be over. All right. So that's one of the stuff that's one of the things that we're focusing on today. The important things that I kind of want to take away is make sure you always check your news and make sure that you're constantly checking in on it, because the news does take precedence over over your technicals. Number two, gaps need to be filled. Okay, it's going to happen. The gaps need to be filled. So we want to make sure that we are taking that into account and that we are filling those gaps. The third thing is, this is an extremely volatile time with everything that's going on with the Strait of Hormuz and the war in Iran. So any sort of comment by the president can dramatically impact the market. The market is extremely emotional, so just be very careful. Trust your structure. If you have any questions, please reach out. Would love to have you guys join us on this quest. As a quick reminder, again, everything I said today, I've only been doing this since September, so end of September. So let's just call it October. All right. So I'm an aware person, but I don't know what I'm talking about on a high level. I'm only learning from someone who's exceptional, and I'm sharing with you what I'm learning. So what I'm trying to do is just show you how far you can come in a short period of time. And our goal on this podcast is to show everyone how we can take $250 and turn it into $1 million, depending on how long it's going to take. My current focus for this week is to try to take my account that I have from $250 to $4,000 by the end of the week. Okay. Once it goes to the end of the week, I'm going to take that demo account. I'm going to move everything over to my live account. I'm going to try to do the same thing on my live account. Take my live account from 250 to 4,000. Okay, so that's my next goal. But again, that's 2 4x jumps, because what we're trying to do is take a 4x leap, a 4 times leap. So 250 to 1,000, that's step 1. 1,000 to 4,000, that's step 2. I've already taken an account from 250 to 2,000. Now I want to take it all the way up to 4,000. All right. So this is what we're trying to do. This is what we want to do with you. We want to share. We want to answer questions. We want to be 100% transparent, show you the good, the bad, the ugly. I'm sure we'll look back on this at some point down the road and just smile and laugh about some of the things that we're doing. But, you know, I'm fairly confident in everything we're being taught. Actually, I'm very confident in everything we're being taught. I'm fairly confident in my execution. So I'm getting very good at it. I'm getting extremely confident at it. And you guys will start seeing. I mean, you see it already, but you'll start to see more and more as we go on. So thank you for spending time with us. Thank you for being with us today, and hope everyone has a fantastic day. And let's stay in profit, everyone. This is what our goal is, and this is fun stuff.